There are four key questions which I think investors really need to be thinking about during the course of 2019. The first of these is the relationship between the United States and China. It's not in a good place at present. How much worse could it get during the course of this year? There are a number of difficult areas the two governments are talking about. On balance, we do think that they will reach some form of amicable relationship. It's the benefit of both governments, of course, if they do. The second question really concerns the possibility of a policy error. Could the Federal Reserve raise interest rates too much this year? Probably because inflation rises late cycle. Again, we think this is unlikely. The Federal Reserve is being more cautious. And anyway, inflation is coming down. Oil prices, structural factors holding it down. The third goes back to China. China's not been in a good way during the course of the last year or so. Could the government turn it around? We think that it will. We think it is taking sufficient action. But yes, there are some uncertainties there. Stability, though, is the watchword for the Chinese government at the end of the day. And the last point is political tensions, of which there are many in the world, of course. But I think we'd focus on Europe. Yes, we are actually quite concerned. There's a number of political issues in Europe. We don't think they're going to go away quickly. But the good news is we don't think these are going to cause the same sort of crisis that we saw back in 2012 with worries about the European Monetary Union. So on balance, this is a year where political tensions will remain in place, but we do think that the global economy will continue to make progress. Well, we've been talking about political tensions, and I'm sure there'll be many more during the course of 2019. And of course, we did see two market corrections during the course of last year. And again, we could see another one or two during the course of this year. So investors, I think, need to think about ballast, some sort of protection in their portfolios. For the more sophisticated investors, they're probably going to be thinking about things like the yen or the Swiss franc, perhaps the amount of private assets in their portfolios. For the man and woman in the street, then I think the level of cash in their portfolios, how much cash do they actually want to hold, and when might they put that to work, as and when there are market valuation opportunities. And then what to do with that cash, of course. Well, one option clearly is equities. We do like equity markets. We do think that with corporate profits continuing to grow this year, there are opportunities, especially when valuations have improved. And so a mixture of emerging market equities, perhaps European, perhaps Japanese equities, are all worth thinking about. And then this is still a world of low interest rates outside America, of course, and many investors do still need income or yield. So we think that perhaps a mixture of emerging market debt, European real estate, and of course equity income funds might make a good combination. So we do see the world economy moving ahead this year, but this is a world still of political uncertainty, and so a mixture of real estate, equity and bonds, plus that cash to put to work when there are valuation opportunities, that's what we think investors should be considering.